Hello, everyone. This is the Morgan Millennial Minute Report. The show is brought to you by David Morgan of themorganreport.com. And today we're having a very special guest on the show. His name is Paul Fan, and he's been trying to help millennials with his Financial Millennial channel for a while now. And we're really thankful to have him on the show today. Hello, Paul. Thank you for being on the show.
Thanks for having me.
Oh, yeah. So I'm going to share my screen to show everybody basically how we see that oil is going up very rapidly due to this war with Ukraine and Russia. And I just wanted to see your kind of thoughts on this and how millennials can prepare. And if you think, oil is going to be continuing to go up, and kind of just what your thoughts on this are.
Yeah, I mean it's crazy, right? Because it was in March 2020 when the pandemic started. Oil went to something we've never seen, a negative oil price, right? Negative 37, the lowest point per barrel.
Yep, you're right.
So, you were literally being paid to, just grab oil. And, in some cases, I was seeing some of those farmers or people who own like shipping companies actually take advantage and actually just go and buy. Well, rather, when they buy, they're actually getting paid that 30 something dollars plus getting oil and just kind of hanging on to their, land. And now it's like, 120, and, who knows where it could go. I mean, it was kind of slightly below 100 prior to, the Russian invasion. And now it's kind of just shot up in anticipation, I guess, for the oil contracts. So we've seen, $150 swing in, just 2 years. I think not just with oil, but with all commodity markets and financial markets in general, it seems like there's a huge kind of extreme in the bull and bear periods. So when it goes to the bear period, it can go way worse than everyone expects, and perhaps for a long time, because oil had been down since 2015 for, you could say, 7 years. And and on the flip side, when oil, is going to go up, it could stay up for many years too. Case in point, the period prior to 2015. So, my opinion would actually be that we're going to see an extended period of oil and other commodities stay at a rather high price point, justified or not justified. And I would have said that even without this, war shock that increases commodity prices. So the fact that this war is here and we don't know how long it could last, I only see commodity prices staying this high. So I don't really see it coming down anytime soon, especially as we know with the industry of, supply and demand, supply kind of all going off all at once, and then it kind of goes the other extreme and then back, and it kind of oscillates between these two extremes. That's kind of what I see here. So for the near foreseeable future, short term, few years, I still think oil is going to be at a high price. I don't know if it'll be over $100 per barrel every single year, but I think it's going to be quite high, higher than, the expectations, had been for the last several years.
Yeah, and it's definitely a shock to most millennials, especially millennials here in California. We're seeing gasoline at $5 a gallon, and like you said, they were basically giving oil away, the last few years. So it's came, as a pretty big shock to everybody. So what do you think caused this huge swing of the pendulum for oil just to skyrocket to where it is now, and all these commodities? And basically, is there any way millennials can prepare, you think, for increasing commodity prices?
Yeah, I mean, I think why we're here is because of the economics 101, supply and demand. Demand for oil is, for the most part, somewhat stable. Like, I think it's forecasted to grow 2-3% per year on a long-term basis. If we take that as correct, demand is relatively stable. So what really causes the oil price to change a lot is actually the supply piece. So, what ended up happening is we saw leading up to 2015 is far too much oil being produced, and that's where you see the downward spike there for the oil price going from 100 to like 40, 30, and so on. And then, that's caused in large part from the US kind of fracking boom, right? But then, as you can see from the years after, you see a huge kind of supply restriction. And, from where I'm from in Canada, the Alberta oil sand, they just stopped, looking for new exploration and started restricting and turning off current supply. So, and that wasn't just happening in Canada too, but in other countries in the world. So slowly you see supply going down and down and down. And then what you end up having in with the once in a generational or once in a lifetime, thing that we've had the last few years, what ends up happening is demand actually goes down too. So what you have is a weird situation of low demand or lower demand and low supply. So once you have low demand and you see this extreme go the other way, as we've seen, coming out of this once in a lifetime event, and from a aggregate shock in the plus side with war, that leads to a huge boost in demand with low supply. So that's kind of why the oil price just explodes all of a sudden, because there's just not enough supply. So, for regular folks and millennials, like, what can we do in this situation? It's hard for you to just say, well, let's just stop driving. Like, that's kind of hard. You still have to maintain your life, right? And live your life day to day. So I would say that's pretty hard to do. I mean, if you're driving a heavy gas guzzler, you could consider paring down to a more economical gas-based car, or you could consider switching to perhaps like an EV, an electric vehicle. That could help in terms of paring your costs. But otherwise, like, it's hard to really protect yourself from this kind of inflation because it's on a macro level. It's hard for you to predict, and definitely impossible for you to control. So the only other situation that you could profit from it is, to do investing against or for commodities, investing when it's in those bear periods, and then perhaps selling when it's in those, peak bull periods. That's really the only other thing you can do. Otherwise, the macro level is just going to kind of play out.
Yeah, and it's definitely pretty interesting, how, US crude jumped to $25 a barrel to 115, the largest 1 week gain on record. And, basically a lot of the reasons why I think that happened was, like you said, the supply, there were sanctions on Russia and everything else that we've seen recently. But that only accounts for about 7% of the total US oil, market. So it almost seems like these, companies are gouging people or something. It just seems pretty unbelievable that it could rise so quickly, basically from $25 to 115. Like, that's like 4 times, the rate. And at the same time, we're seeing, other commodities like gold and silver, just going up quite a bit. It's actually moving up, quite a bit. So I just kind of want to get also your take. There's a lot of people have invested in things like Bitcoin and stocks. So what are your kind of views on Bitcoin and stocks as well for millennials investing in it? Do you think commodities are probably the better play right now? Do you think Bitcoin and the stock market will, move and go higher? Or what are your thoughts on that?
Yeah, I mean, I kind of follow the investing principles of Buffett in regards to things like gold and silver being kind of non-productive assets. So while they're kind of non-productive in that sense, they're not going to produce more stuff with it on its own accord. But there is value to it, in again in what we're talking about for supply. So with regards to like Bitcoin and stocks, I mean, Bitcoin and crypto is kind of an entirely different class, but I think stocks, as you look back, like, history doesn't repeat itself necessarily, but it kind of rhymes. So if you look back at the historical at least in the US, like in terms of the indexes, they kind of have long periods of bull and bear markets, like very long, right? If you extend the graph, and it can go for in some cases decades of up periods or decades of down periods. So in terms of the stock market, a lot of so-called experts and gurus have predicted stocks will actually kind of do worse this decade, just because of how well it did last decade, from 2010 to 2020, which is very possible, right? Because I see where we're at right now is kind of a stagflationary period, because inflation is kind of rising rapidly, probably more than what the official numbers are reporting. But at the same time, growth coming out of recessions will tend to slow down. So we're kind of in a stagflation period. I would just say that long term, if you invest in really solid companies that have good fundamentals that are going to be providing value to society with growing earnings and innovation, I think you'll still do well over the long period. Right now, in regards to the short term, I do think we're going to have some rate hikes in the US and probably worldwide too. We'll see some interest rate hikes, 1, 2, 3, or 4. We'll see, but that will kind of hurt the companies that are kind of not making as much money, and with inflation, companies that don't have pricing power, so companies that can raise prices, will be hurt. So I would say you want to find companies that haven't borrowed a lot of money because the interest rate on them are going up, and you want to find companies where they have pricing power. So if inflation is, whether that's 2, 5, 10, or 20%, that company can raise their prices at relative ease, so they'll still keep up with inflation and not be hurt by it. So that would kind of be, on a general level, the investment strategy that I would take.
Yeah.
And yeah.
Oh, I was just going to say, you're definitely right. I think you're right with the interest rates, because we already see, the Bank of Russia, I think they doubled their interest rates or something to the big effect, like that. And, that was the hardest hit country so far, from this war and everything. So you're probably right. It'll probably go into other countries, and that could hurt the housing market. So I definitely think, raising the interest rates is definitely something that's on the table here in America. And that leads me to a really important question. So we see, in the banking sector in countries like Russia, for instance, that, they're starting to kind of close down their banks, basically because a lot of people are going to the ATMs and pulling out as much money as possible because of the unrest. So what are your views on the banking sector? Do you think something similar could happen here in America and Canada? Do you think the banking sector will continue to thrive, or do you think it'll begin to shrink?
Yeah, I mean, as to whether bank runs will happen in Canada, US, I would say that's very unlikely.
Okay.
The only way that could happen is if a similar black swan unexpected event occurred that has a very low probability. So I would say it's very unlikely for a bank run situation to happen here. As for, the banking industry, I actually think it is kind of taper off and perhaps go on a decline, especially with these archaic industries that haven't seen change for a long time, like the bank industry. I think we are seeing these other kind of alternatives, become greater and greater, whether that's cryptocurrency or, decentralized finance or other payments and borrowing methods and banking systems. So I see that kind of on the uptrend and kind of slowly eating into the traditional bank industry that has seen basically no competition or innovation for a long, long time. So for sure, I think the big banks will probably kind of slowly, they probably won't grow by a lot now, probably taper off, and we'll see emerging players and these other alternatives spring up.
Yeah, that definitely makes sense. So your channel is the Financial Millennial. So as kind of a last question, what are some things you think every millennial should do with their finances right now?
Well, I think cash is not going to be a smart long-term strategy just because of how much, especially with how much inflation there is right now. So, that doesn't mean you just do everything with it all at once, but I would say try and look for alternatives to your cash, whether you think that's going to be in stocks, in hard commodities, gold, silver, oil, or crypto, or one of these other alternative investments, or perhaps housing. I would certainly look at one of these alternatives, because if you hold cash for the long term, you're basically at a guaranteed loss of anywhere between 2 and 15%, whatever the inflation rate is.
Yeah, that definitely makes sense. So I'm going to share the screen so everybody can see your channel. And everyone, please subscribe to his channel, The Financial Millennial. Is there anything you'd like to tell the viewers about your channel?
Yeah, I mean, I kind of jump all over the place within financials. I'll look at stocks, look at crypto, look at the general financial scheme. So I don't really be set on one financial topic, and I kind of jump around. So, if you find a topic that interests you, certainly subscribe to the channel.
Yeah, that's you offer a really good stuff on your channel, and I definitely think everyone should subscribe to it. And I would just really like to thank you, Paul, for being on the show. Is there anything else you'd like to add in this video?
No, I'd like to just thank you for your time here.
Okay, well, a big thank you to everyone who was watching. And if you could please subscribe to the Morgan Report, we have a link down in the description below. And I just hope you all have a good day. God bless.